Hello everybody and welcome to today's video entitled The Best 10 Stocks in My Portfolio. These are my top 10 positions, and this is a weekly video that I do now. And why do I do this weekly video? Because I want to show the updated valuation and the relative valuation of each stock compared to the other one. This is a different video than my usual Friday video where I do almost 40 stock that I value. Here I try to focus just on my top 10, and right by looking at it, we can see, for example, that Palantir and Tesla and Crowdstrike are a little on the pricier side right now, while stocks such as Enphase, StoneCo, MercadoLibre, Nubank, or Enphase are more on the cheap side right now. And that's the beauty of these spreadsheets. You can really compare which is more expensive, which is less expensive, and really focus your weekly buy. If you buy stocks weekly like I do, focus your weekly buy based on the valuation. This is not investment advice, of course. This is just what I do. So if you're not new to the channel, this is probably all you wanted to see. However, if you're new to the channel, let me tell you about how I do things around here. So how do I do things? Well, on this channel, I only focus on hypergrowth. I only focus on stocks that do not have a consensus yet. I only focus on stocks that not everybody agrees with and agrees on, products that tend to be a little more controversial. And why do I do that? Because I believe these stocks are the only type of stocks that are able to grow at a rate of 30% or more. I am seeking 30% revenue growth or more. And why do I do that? I do that because I believe a doubling in 5 years or a quadrupling in 10 years is a good investment goal. But for that, you need to earn 15% real returns. And to earn 15% real return, you need to have 30% nominal returns. And of course, if you only were to earn 15% nominal return, your actual return would be much closer to 0%. It'd be closer to 0% because of the expansion in money supply, right? Everything we see in inflation and all of these metrics, yeah, they matter a little bit, but really what matters the most is the most desirable good in society are divided by how many dollars are out there, right? And that's why real estate goes up much faster than the rest. And that's why so many of the highly desirable things like desirable foods, desirable vacation, anything that is truly rare is gonna go up at a pace that is similar to the growth of the money supply. And I estimate the growth of the money supply, to be at about 15% a year. And that is because I am including euro dollars. And euro dollars are a very opaque system. It's all of the dollars that are held outside of the United States that make their way back to the US through international trade. It's a very annoying thing. So even though if you look at things like charts of M1 right now, you'll see that M1 is kind of flat. Well, how convenient. We have more dollars in euro dollars and we don't have a chart for euro dollars. And so really the goal is to fight and beat commercial money creation. And really you want to own a stock that's gonna earn its share of new dollars whenever new dollars are issued. You want your stock to own this share of new dollars, and then on top of that you want it to earn more dollars. So that's why I'm looking for 30% revenue growth. And why revenue growth? Because that's how dollars come into the business. Right? Remember, stocks are just fiat derivatives. They're just derivatives of money. So we need to include this macro perspective whenever we look at stocks, because otherwise we would just keep money in cash or buy bonds. I mean, sometimes I wonder which one is worse: buying bonds with counterparty risk or just keeping cash. I don't know. Stocks to me are the best way to do it. I do stocks, but I do hypergrowth stocks because I have no choice. I have to do hypergrowth stocks. I love Google. I love Apple, just like anybody else, but those stocks, I estimate, they will just stay afloat. They will just earn a 15% nominal return. I don't think they will earn a 30% nominal return. And so in order to do that, I have to focus on hypergrowth. Only hypergrowth can, and that's innovation. That's why I focus on innovative stocks on the channel. And why innovation? Because when you look at sales growth, what is the best way to know whether a product is getting adopted or not? Well, whether it's getting sold. Because we all know that companies can play with their earnings, right? They can manage their earnings, right? Look at just buybacks. If you buy back your stocks, buy back 5% of your stocks, your earnings are going to go up 5%. There's so many different ways that companies can manage illusions and can manage their earnings. But what you can't manage is sales. Sales are a true proxy for adoption. Sales don't lie. If your products sell out, if you have more sales year after year, that doesn't lie. And that is my style of investing. I focus on sales. Sales is the most important thing, i.e. revenue. And how do I do it? Well, I look at companies that are early on in their product adoption cycle, like Tesla, like Enphase, like HIMS, like Palantir, Crowdstrike, MercadoLibre. All of these products are early on in the product adoption cycle. My goal is that by the time price to earnings ratio start to matter, I want to be out of these stocks. I want to be out of these stocks. That's why. And sometimes I take this as a compliment when I see it in the comments. Sometimes traditional finance folks, people with a traditional finance view, will tell me, so overvalued. This stock is so overvalued. I take it as a compliment. Yeah, it's overvalued because it's not optimized for earnings. It's because the stock that's not optimizing earnings. It's a stock that is optimizing growth and growth in itself. And the whole idea of my style of investing is I try to buy stocks at early signs of product adoption. And once the stock really is being sold to the whole world, and once everybody has a product, I try to get out of the stock and move to the next product adoption curve. And this is, of course, the S curve. And how do we get those 30% growth? Well, you get it at the exponential part of that S curve, which is on the lower end of the curve. You see right there, this is about 5%. If you move on right here at product adoption, you're going to get exponentiality right here. That's the sweet spot for me to buy right here. That is a sweet spot, and I believe all of these stocks are within that sweet spot of product adoption. So let me go ahead and tell you a little bit more about these stocks. First one is Tesla. Tesla is over 40% of my portfolio. Actually, it's perhaps it's not reasonable, but you don't cut a winner. This is a stock that has been winning, and this is a stock that I view as continuing winning. Right? It's EV adoption. If you look in the United States, 6% in the US, 4% for Teslas. Tesla is the uncontested leader, and so the question is Tesla going to have 50% market share in 10 years out of vehicles in the world? And frankly, I believe so. I mean, I realize that's a very, very bold statement to make. But you see year after year that the competition is not coming. And the competition is not coming. And as we go over the years, we see now that there's a lot of chatter about competitors of Tesla now using the Tesla software, using the charger network. So it's going to be an interesting situation. Is it going to be like if you follow Google? Google has its own phone, the Google Pixel, but it also operates about 50% of the phone of the world with the Android app, right? With the Android operating system. Is this going to be the same deal for cars, right? I really, really don't know. But I know electric is revolutionizing the world of car. That's a product that's a 0 to 1 product, i.e. it is what we call an order of magnitude better type of innovation, right? If you look at the cost, it's an order of magnitude cheaper. If you look at, for example, if you're into acceleration, it's an order of magnitude better, right? For the cost, dollar for dollar, nothing accelerates faster than an electric car. If you look at the fact that you don't have to go to the gas station anymore, you have to stay home now. You just stay home and charge it at home. I know people that have Teslas. They haven't been to gas station in over a year. They don't remember what it's like, a gas station. And gas stations are not an example of first principles thinking. If gas stations were an example of first principles thinking, one may wonder why they sell alcohol at gas stations. If they didn't sell alcohol at gas stations, that would be first principle thinking. If you really analyze gas station and their value on their face, you realize but they're highly problematic. And that's one of the things that Tesla is disrupting, and electric cars in general. So electric cars are going to get adopted, and that's my view. And if you look at, of course, the return for electric cars, they have been, in nominal terms, 53% over the past 10 years, 53% each year. And what I do usually is I subtract monetary inflation. What do I get? I get 38.3% real return. That's the real return. That's a real return on investment in a stock like this. And keep in mind, that's about 4% of all vehicles sold are Tesla, right? What if you're bearish and you say they're going to get to 20%? Imagine that. Imagine how big that would be. Anyways, moving on to Enphase. So what is Enphase? Enphase is it's a similar story to Tesla. Actually, Tesla has a little bit of a competition with Enphase, although Tesla's attention is mostly on cars and other endeavors. Tesla is doing Enphase is residential solar. So residential solar is taking off. One of the fundamental reasons why you would want to invest in residential solar is, do you believe that in 10 years from now, when you take a walk in a neighborhood, every single house is going to have solar panel on its roof? And that is the fundamental belief that I have. I think most homes, if you follow the work of Tony Seba, you may also think that most homes are going to have enough electricity to not only power themselves, but to also recharge one electric car or two, and to also have electricity to spare in the summer months when the days are pretty long. And that's going to be a revolution right there. And so right now in the US, adoption of solar is about 4%. If you walk into your neighborhood, it's likely you're not going to see a lot of solar on the roof of homes. It's about higher in the US at 10%. But to me, there's a clear S-curve going on where people are going to adopt this product. And Enphase, in my view, is the leader of solar systems through their microinverters. A microinverter is a tiny device that you place under each solar panel, and that turns the DC power into AC power and turns the solar into your own solar system. And of course, you need the electronics, you need the semiconductors to manage your own at-home grid. And that is what Enphase does. Enphase provides a holistic solution to manage your at-home grid and eventually entirely be off-grid, or if you are grid-tied, really the only reason why you're grid-tied is because you want to make a little money in the summer by feeding electricity back to your neighbors who don't have solar yet. That is the whole idea. I believe Enphase has the technologically superior solution. There is, in my view, there is no reason that we should use bulky string inverters, very heavy setups that can break down. In my view, there's no way we should use this. I see the future as fully microinverters. But if you believe in string inverters, you may like Solar Edge. And really, Enphase and Solar Edge are becoming a duopoly in residential solar. And by the way, if you look at the returns, of course, between Enphase and Tesla, you see they're not too far off. Enphase is, of course, not as much of a return, but you want to have a little bit diversification. Knowing that Enphase is my number 2 stock if you just look at stocks, and it's my number 3 position if you include Bitcoin. Bitcoin is right behind Tesla for me. Moving on to HIMSS. So why HIMSS, right? What is HIMSS? Well, healthcare is going to get revolutionized. We don't need as many medical office buildings. We don't need as much brick and mortar healthcare. Actually, if you look at the data, it's about 70% of seeing a doctor can be done remotely through an app. Really, when there needs to be something done on you or some sort of a procedure that requires in-person visits, that's really only 30%. And so those 70% is getting disrupted. And you have HIMSS and Teladoc really that are trying to disrupt this. I believe HIMSS has the better playbook. HIMSS has a better playbook because it operates entirely outside of the healthcare system, and it got started by looking at minor health issues and helping people get treatment for minor health issues, which quite frankly most of the time insurance companies think you don't deserve as a customer, right? If you look at things like hair loss or things like ED, things like that, they're usually not covered by your insurance. Sometimes it could be bigger things too that are not covered by insurance. And this is why I think the playbook of HIMSS is to try to say, okay, well, we can have healthcare that's dirt cheap now because healthcare is just an app, and 2 fully automated ePharmacy warehouses, which is what HIMS has. HIMS has an app and 2 almost fully automated pharmacies that deliver meds if you need meds. So HIMS is a platform where you just get on there and see a doctor, and if the doctor thinks you need a medication, the doctor prescribes a medication to you and you get it at home. And so really the cost that drives out of the health system compared to the traditional health system, it drives out so much cost that really the cost of HIMS is equivalent to a copay that you would have in most insurance. And so if the heavily discounted, electronically driven commerce of healthcare is the same price as a copay, then why would you want to go for a healthcare system? That's the whole idea behind HIMS. That is why I love HIMS very much. I think it's a company that is heavily undervalued, extremely misunderstood right now. And I know it was misunderstood because I dismissed this stock for like 6 or 7 months, thinking, oh, this is just silly marketing. This is just a silly company. It's a stock that's very easy to dismiss, And Tesla. Ask yourself, Tesla. If you're a growth investor, you likely look at Tesla positively. Ask yourself, how long have you dismissed Tesla? Have you dismissed Tesla until 2019, until 2017? Right? When did you stop dismissing Tesla? Right? Same for Bitcoin. When I talk about Bitcoin later, we'll get into this. Like when did you stop criticizing Bitcoin? It's normal that we hate change. We dislike change, and that is entirely normal. The question is, are you able to stop disliking change before everyone else so that you can see these opportunities, right? And then are you able to not fall for everybody telling you that you're wrong? For example, Bitcoin. I started buying Bitcoin in 2015. I sold it all a few years later because everybody told me I was wrong, so I wasn't strong enough, right? Now I can tell you that I make my own mind. Like when I buy a stock, it's only me, because I don't listen to what others say. It's a journey. It's really a journey. This type of investing, where you invest in innovation, that's really a journey. Because obviously, if you start investing in an innovative stock, most people are not going to agree with you, and you need to be comfortable with that. And right now, HIMS is kind of at the edge of what most people disagree with me on. I think Open Door, people disagree with me on Open Door even more than they disagree with me on HIMS, I would argue. But anyways, let me move on. So then we have Palantir. So Palantir is a stock whose CEO has given us a long-term guidance. He told us, the CEO, 30% revenue growth over the next decade. He might have backtracked that a little bit, but not too much. And really, this is a company that now is putting itself forward with AI. Palantir as a great founder, in Peter Thiel. Peter Thiel is a member of the quote-unquote PayPal mafia, which is the Elon Musk gang. If you listen to the All In podcast, for example, most of the members of the All In podcast are part of this PayPal mafia or PayPal gang, which is really the people that popularized the idea that to disrupt, you need to have a new innovation. You need to do something that has never, ever been done before. And that's what Tesla has done, of course. That's what Enphase is doing, of course, HIMS, but also Palantir. Palantir is really playing with their playbook. They are building from scratch an AI platform that integrates hundreds of different tools. And even though Foundry, the software Foundry, is not really proven right now in its commercial setup, I believe we have enough evidence to know that it is proven from a military standpoint. This is the main software that is run by militaries in the West, and as the CEO says, if only we could tell you how relevant and important to the world our software is. That's what the CEO says. But obviously, you really can't say that, because it's a military software. But I have very little doubt that the software is at the cutting edge of what it does, and that's the reason why I own Palantir. It's a safe, customer. The US government is a safe customer. It's a recurring revenue customer. And Enphase is the leader in that field. And they could become the fourth contractor of a military industrial complex. And that alone, for me, is enough, right? It's like investing in an innovation. If you think about the military innovations, if you go back to the early 1900s, right, tanks or radio, they were major innovation, and the military was first to adopt tanks and radio. And if you didn't have radio, if you believed radio wasn't a thing, you stayed behind. That's why I have very little doubt that the U.S. military is adopting the top technology right now, and that top technology, I think, is embodied by Palantir. I think it's a fascinating company, heavily followed on YouTube, so I don't cover it too much because there's so much content on Palantir. But this is nonetheless a company that I believe in, and that is very much anti-fragile. And they're so anti-fragile they actually own gold, which is kind of silly and funny. But anyways, let me move on to Crowdstrike. Crowdstrike is an impressive company as well. Crowdstrike is a company that lives in its time. And what they do is they're an AI-fed endpoint security system. So what is an endpoint, or what is an edge device, right? That would be something like a car or a cell phone or a laptop, anything where a user uses the product is an endpoint, and it's a possible entry point for quote unquote a virus. And Crowdstrike is an anti-virus, although it's not exactly that, but that's how I call it. And it's a cloud-based security system in the sense that it has a network of computers, a major network, hundreds of millions of nodes, and whenever there is a breach somewhere, that breach is broadcasted to the network. And the broadcasting of that breach sends a patch to all of the computers in the network. So that's the whole idea. And that's why I believe Crowdstrike will win, because it's all about the network effect, and it's all about who has the biggest network in order to win. And if you're looking for a security system for your corporation, you would try to go with a security system that has the most relevance, that has access to the most occurrences of breaches, and that would be Crowdstrike, because they have the largest network. So that's why more people are joining Crowdstrike as customers in order to benefit from that. And I think they will win because they have the most data. And that is just my view. And whenever you start introducing network effects into a business, that business doesn't necessarily have to be the very, very, very best. It can just be decent and still win in the marketplace for a very, very, very long run. If you look at, for example, Facebook, the criticism that Facebook comes under every other year, Facebook has like a phase where everybody criticizes it and calls it the worst company in the world. We're not in that phase right now, but if you go back a year ago, we were in that phase. And the stock goes down of Facebook. But why is Facebook still the biggest company ever in the social media field? Why is that? Because they have the biggest network. Because they have 3 billion people. Because you would only join a company that has everybody else registers where your friends are, right? It's the same reason why you would decide to learn English. As soon as you realize you live in a country that doesn't speak English, most people are like, okay, I gotta learn English now. Why? Because most people learn English, and that's where you get the most value. So network effects create a lot of value, and it's a top business model of the networked world we live in, and that's why I really love Crowdstrike. Plus, they gave us impressive 3-year out guidance. The product is resonating with customers. Moving on to MercadoLibre. MercadoLibre is the oldest trend that I have in there. MercadoLibre is focusing on e-commerce. So e-commerce is an early on megatrend. If you go back to the US, 2003, 2004, that was the very beginning in that megatrend. If you bought e-commerce in 2004, kudos to you. That means you had the vision of buying a website that sells stuff in an era, right, 20 years ago, where you would literally have a conversation for saying that you've bought something online, right? People believed buying something online was a scam. People didn't want to buy anything online. There was no trust back in 04, 05 for buying online. You had to say, oh yeah, but something online, and didn't get ripped off. It was, you were the talk of the town in the early 2000s if you were buying something online. And one needed to have a foresight to buy the e-commerce companies of the United States in the early 2000s, right? You would have been against the trend of then. And that's why I say it's an old mega trend. Right, e-commerce is an old megatrend. That's why, to me, opportunities in e-commerce now, you find them in markets that I've started this megatrend a little later on, and that's why I focus on Latin America right there. Latin America, for e-commerce, doesn't have a penetration that we have, say, in the US or even in Europe. And because of that, I like MercadoLibre. MercadoLibre, to me, the best way I look at it is just like buying Amazon or Alibaba in 07. This stock is still small. This stock could become much bigger. It's the leading e-commerce platform in Latin America. They also have a fintech division. They have an ad business division, and they are still exhibiting impressive growth. If you look at the annual return, despite the crash that we've been going through for, a year and a half now almost. So despite that crash, the stock still yielded 27% average annual return. Of course, once we're out of that crash, we will handsomely get back into the 30% ARR year after year. At least that is my view. That's over 13 years, by the way, that type of return. So really, really, you can sustain that for a long while. And that would be close to a 35% ARR. So I'm very, very happy with the stock. Growth rate, right? The estimates for growth are still at 45%. Long-term growth, by the way. I'm only using very long-term growth here, right? I'm not using next quarter growth or next 12 months growth. That's not what I'm using. I'm using the long-term guidance. And not all companies give us long-term guidance. And when they don't, I have to guess what it is. So anyways, let me move on to StoneCo. So StoneCo... it's in the payment space, and note how, aside from Energy Revolution, which I have as one mega trend, all of those are separate mega trends. So the payment space, that's a separate mega trend. And again, the way I view StoneCo is I view it as buying Square in 2014. But it's dirt cheap, right? Square is not as cheap as StoneCo. StoneCo is very, very cheap. StoneCo is a payment terminal in Brazil. They are a duopoly along with PagSeguro. And they're a darling of both Warren Buffett and Cathie Wood, which is pretty rare, which tells you that this is a stock that appeals to both value investors and growth investors. They have impressive adoption. The growth is still there, and they're a duopoly with PagSeguro. But I prefer StoneCo over PagSeguro because StoneCo is the slightly newer, slightly edgier company that I think resonates much more with the Brazilian culture, although I'm not Brazilian, so I can't say, but based on my research, that's what I'm finding out. Moving on to another Brazilian stock, Nubank. So Nubank is a neobank in Latin America. Right, and this is the same as, for example, when we talk about HIMSS, for example, and I tell you we're really not going to need that many medical office buildings in the future because everything will be done for your phone, for an app. Same thing is for banking, right? You don't need 7,000 branches if you're Wells Fargo or 5,000 branches if you're Chase. You don't need that anymore, and that's what neobanks attempt to do. And Nubank is even better at doing that. They're better, in my view, because they're operating in kind of a blue ocean. They're operating in a market where most people were unbanked to begin with. And so that, not most, but a lot of people were unbanked to begin with. And so that really, really helps out. And, another stock that comes up a lot in neobanks is SoFi. But, SoFi has to fight legacy banks for customers. Nubank doesn't have to fight legacy banks. And I don't like that SoFi has an association with student loans. I'll be making a separate video about my views on SoFi and their association with student loans. I also like Latin America as an emerging market. I think it's a market that I understand because it is closer to the US than, say, the Asian market as far as the culture goes. I think I can understand it a little better. And also Brazil as a solid growth numbers. It's an emerging market that I think has a lot of potential and a lot of growth potential, and that's why whether I'm talking about Nubank, StoneCo, or MercadoLibre, these Latin America stocks I believe in very much, although they are obviously much smaller positions, right? I mean, my Tesla position is almost 3 times as big as all 3 of those combined. So it's all a matter of position sizing. Position sizing matters when you invest in stocks, in my view. Moving on to Airbnb. So Airbnb is another one where it's controversial because it's early on, right? A lot of people don't like Airbnb. A lot of people say, I'm going to say Gen X onward, don't get the hype of Airbnb, right? They get caught up in the idea that Airbnb is awful, and why would you stay in an Airbnb? Why wouldn't you stay at a hotel? Well, that's because you don't consider that hotels have never ever been disrupted. And from a first principles perspective, maybe packing 1,000 people in a tower maybe is not the most optimal way to go on vacation or to even go on business, right? And that's what Airbnb is doing. Airbnb is trying to create housing that fits different people, and there's as many people as there are possible vacation opportunities or housing opportunities. Airbnb, of course, is trying to disrupt much more than hotels. They're trying to disrupt, in my view, the world of rental living in general, whether it is vacations, vacation homes, mom and pop renters of homes, apartments. I view Airbnb as really disruptive in that, and I think they have a best cost product. They are the cheapest, for example, if you're traveling with multiple people. That's gonna be the cheapest, right? Try to travel with a family of 5. Oftentimes, hotels are not going to cut it. They're also the cheapest if you want out of ordinary experiences. And if you consider the issue of mom and pop rental, which is you have to sign a lease, typically a 12-month lease to get access, they are also the best cost product there, because with Airbnb you don't have to sign a long lease. You can just stay however long you need. It might cost a little more, but barely more. So we see explosive growth and adoption, especially among millennials and Gen Z. It also helps that Airbnb is a platform, and platforms are an amazing business model because you're reusing pre-existing capital. You don't have to manufacture your product when you're a platform. People sign up and offer a product for you, and those people signing up create a network effect, which is going to attract buyers to sign up, because buyers want to have access to the most rooms listed on the internet, which they are going to be on Airbnb. So that's the same story as language. That's the same story, for example, as a dating site. You may have the best dating site. You wouldn't sign up to that dating site if no one is registered on it. That's the same story as Craigslist, right? Why is Craigslist still doing very well, even though it looks like the user interface hasn't been updated since 1997? It's doing very well because everybody's on it and everybody's using it. So anyways, network effects. And I'll finish with network effects. Actually, it's a great transition for Bitcoin, right? What's the cryptocurrency that has been the most heard around the world? That is Bitcoin. That's the most famous one. That's the most well-known one. I mean, I bet you most 80 years old have at least heard of the name Bitcoin. So it is the currency that has the network effects. And I own Bitcoin because, frankly, it is my bond alternative. I understand the idea of bonds. The idea of having something that is not going to be a stock, that is not going to have the business risk, that is going to edge one against business and economic risk. I understand this idea. The problem is that owning bonds, you have this counterparty risk, which is very risky, right? It's very risky from a standpoint, of course, of buying companies. Your company goes bankrupt, your bond's gone, but it's also very risky in the sense that even if you buy treasuries, we know that treasury coupons get financed with the issuance of new treasuries, and so you have debasement behind bonds. Bonds are contracts. You're locking in a loss. When you buy a bond, you are locking in your losses. At least that is my view. And so I love Bitcoin because Bitcoin is not a derivative of a US dollar. Bitcoin doesn't have counterparty risk. You store it in your head. You memorize 12 words in your head, and then that's it. It just lives as free speech in your head, and that is absolutely wonderful. Now, of course, I cover stocks a lot on this channel, so for people who like to own stocks and don't want to actually own pure form, I always think pure form is much better, but if one doesn't want to own pure form, you can own a proxy for Bitcoin. I think MicroStrategy is a great proxy. That's the proxy that I use, but you could also own an ETF like structure, like the Grayscale Trust, which is called GBTC. And Bitcoin, of course, benefiting from its network effects and its adoption and its popularity. Also, look at Gen Z. Look at what Gen Z likes. Gen Z loves Bitcoin. I mean, they really do. So looking at all of these network effects, we understand why. If you look at the return of Bitcoin, you dwarf Tesla. Really, you're at 78%, and that's GBTC, by the way, which trades at a discount right now. Actually, if GBTC traded on par, the return would be higher than that. But you're at 78% return over the past 5 years for Bitcoin. Assets like that, an asset that grows so fast, so big, and that has lasted, more than 12 years now, 13 years. More than 13 years now for Bitcoin. That's not a bubble. People often say, well, that's my opinion, right? Not investment advice. But people often will say, oh, look at the tulip mania bubble, or look at the dot-com bubble, which, by the way, the dot-com bubble was not a bubble. I just want to put that out there. But let's look at tulip mania, right? Tulip mania was a bubble, right? In the 1600s in the Netherlands. That didn't last 14 years, right? That lasted multiple months. That did not last 13 years. So, anyways, these are my main assets and my main allocation. I really hope you liked the video, keeping in mind that none of this is investment advice. This is just entertainment. I hope you were entertained. I appreciate your likes. I appreciate your subscribes. And if you can follow me on Twitter, I really appreciate it. Have a wonderful day.